Welcome to the video, guys. In this video I've got my update on my $100,000 funded account I'm using with GFT. If you haven't watched the previous video, this is a $100,000 phase 1 that I was processing, and I managed to pass phase 1 last week. And now we're on phase 2, and of course phase 2 is 6% profit target, so I need to make $6,000 on a 100k account, and I'm currently up over $2,000 on a gold trade I took today. So in this video, I'm going to be breaking down the account, the trades that I took to manage to pass the account phase 1 and also make profit on phase 2. And I'm also going to be going through some trading habits that I have that enable me to be able to take trades like this and not care. Without further ado, let's get into the video. As some of you know that I trade gold a lot, I don't trade Euro USD much anymore just purely because it's not quick enough. It doesn't give me enough movements to make profits. So I'll be going through the gold trades that I took last week that enabled me to, make the money that I made. So last week, to simply pass the account, I needed around $4,000. I placed a trade on gold, and all I was looking for gold, I've replayed the chart back to show you guys. All I was looking for on gold was a nice tap back into this demand zone. And as you can see, we have this pivot high, and this pivot high that needs broken or swung. So I marked those highs out. An overall trend, we are on a bullish run, and this could be a reaccumulation. So when we talk about reaccumulations, like I spoke about before, it's the market marking up like so, and then we have a mark down, reaccumulating, RA, and then a distribution towards the top side, okay? So that's what we're gonna be looking for, or that's what I was looking for on gold here. But let me show you my entry model. So this is around the daily time frame, the hourly. That's kind of what I typically look for, is like how is the market moving in general, right? So if we jump onto the hour time frame and have a look at the market overall, we can see that we've got these lower highs being created, and the market's kind of just sideways. It's not really doing much for us. However, you can see we have this kind of internal liquidity of these previous highs. So I marked these highs out, went to a higher time frame, had a look. If we go onto the 8 hour, you can see it clearer. You can see we've got these majority highs that need being swung. So for me, we tapped into this demand zone. The market's had lower high creation, and these potentially could get swung. And now we've got this kind of resistance zone. And if the market breaks above this resistance zone, it could then target this high, this high, this high, etc. That's kind of the thought process with it. So then the market was actually able to swing said high. So once it actually swung on a smaller time frame, let's say for example we're on a 30-minute, we can have a look at maybe a break around here. So maybe you could buy this candle. I play buy stops on a break above a previous pivot high. So you can see we have that break there. I entered long, and I'm not sure entirely because I didn't target the ultimate high just purely based on the fact that I didn't need to, because I only needed to make a certain amount of dollars. So we'll just go for this high. I can't remember it entirely. And then I use these previous lows as a good kind of level to place my risk at, my stop loss at. So we're looking at like a 1 to 2.3. And as you can see, when we bought stop that high, the market then went and swung a high perfectly. And I remember this zone actually because we had a massive supply zone here that the market wanted to tap into. If the market then ran above this level and retested, then we can look for a re-entry for the continuation on into this high. Because I like to play like a staircase thing where we're staring up, staring up, staring up, and it's going to target these previous pivot highs like it did. Luckily, I closed down my trade, passed the account. I'll put some stuff on the screen, and then we had a retracement back into this zone. Then we did go swing. Let me see if we actually come back and retested. Okay, we didn't. We just kind of ran from there, and then that's basically what happened. And that's a simple trade that we took on gold. If we then play it forward, where are we? Yeah, so this is the trade that I took kind of like yesterday. So you can see we have this slow move down, and then we come back into this previous pivot high, and we come back into this demand zone. So you could either mark out this demand zone, or you can mark out this previous pivot high, and they kind of line up. So the market was moving into this zone. Then we had a huge markup, and that's when I didn't really want to get in because it's just already marked up. I don't typically play from demand zones. I want to see, previous highs be broken. So we have this high that is developed, and then the market had to move down. So if we jump onto the hour time frame, we can see it better. So you can see here we had a mark down, and then essentially all I was looking for is the market to break either this high or this high. And then that confirms to us that the market is remaining bullish. We're creating higher lows. We've just come out of the demand zone. We've just come out of a breaker block. And now potentially we could target this high up here, which is what I targeted. So now we've broke above this high. You can buy stop this high. and then you're looking for a mark up into that zone, SL just below the low. And just one more note, guys, is that we've already created a demand zone on this push up. So you can mark out this push up here, like so, and then that's going to be our demand zone. So you can use this as kind of like a bit of a support level if we do have a retracement. And then as you can see, once we broke that high, the market did run up quite nicely. And then now we're just consolidating this zone. And actually, once we consolidate in this zone, so this is like real time now, we can see we've got the supply zone, and just due to the consolidation, I closed my trades out, and we've got FOMC and we've got loads of news coming out today, so I didn't really want to play around. So I closed that trade out around $2,200 of profit. And I'll pull up my GoFunded Trader account now to show you guys. So as you can see, this is my GoFunded Trader account. We started off 100,000 and we're now currently at 102,000. So we made a total profit of 2,250, which is 2.25% on one trade. And as you can see, the trade is down here that tells us what our net profit was, what we traded. Volume's not 125. I actually entered in 1.25 lots. I was going to enter 2 and place my take profit at the profit target I had on stage 2, but I didn't want to risk too much. I wanted to keep my risk low. I risked around $1,000 on this trade, so it's basically a 1 to 2.3, I guess. And then yeah, you can see we have where is it? We have a phase 2 there. So we're currently around $3,750 away from passing this account. Hopefully passing in the next trade. The next trade will really be like a 1 to 2% risk, and from there I can go back into my profits if we are looking to take some losses. So now we've broken down my GFT account, phase 1 and phase 2. I just wanted to talk about some personal things that I do that enable me to trade these accounts like so. The first rule is to set and forget. And I know there's a trader called Alex G that speaks about this a lot, is set and forget and don't worry about it. But I genuinely believe that this is an element that most people fail in their trading. Most traders will take a trade and then they'll watch it forever, and they'll watch it for the entirety of the day, and they'll get emotional, and they've put so much energy and effort into watching this trade that they kind of get consumed by it and feel like it's a personal thing. I need you guys to remember that this is a simulated environment. You'll get paid your profits from the funded account, and that's the prop firm's duty, but at the same time, the only risk is the money that you put in to purchase the account. When I personally place a trade, I will put levels on my trading view chart that tell me where the market is at that current time, if it's swung a high, if it's swung a low, or anything I need to be concerned about. I'll place my stop loss and I'll place my take profit, and I'll look through the trade throughout the day. I'll get on with stuff like this, like I'm recording the video and I'm currently in trades, and this is what would distract me from the trades. Then I'll pull up my phone and it's either a win or a loss, or I'm somewhere in the market, okay? But I can't sit there and watch it all day because it will just ruin me mentally, and I'll get stressed, I'll get frustrated, and then I'll end up closing early, or I'll end up closing at a loss when I didn't need to. I'll trim when I didn't need to, etc. You have all these elements that will, I guess, ruin your trading experience throughout the day. The second thing I wanted to talk about is do not take too long on the accounts, okay? A lot of people that I trade with will spend months and months on one single individual account, and they'll be risking 0.01% per trade. Guys, do not do this. Stick to the risk parameters of the prop firm. There's certain prop firms that have different risk parameters. In GFT, we have around 4% daily drawdown and around 10 to 12% overall drawdown, depending on the account, okay? So use this to your leverage for passing the account. Once you've passed the account, then we switch it on the funded. We reduce our risk a little bit. But I don't want you guys to waste your time trading the same phase 1 for the next 3, 4, 5 months, okay? People do it, and you might be sat there thinking, well, I've never done that, I would never do that. But there is genuinely people out there, and if you're one of those people that stay on one account for a long period of time, stop it, okay? Risk a little bit more, I beg. So risk 2 to 3%. Like, it depends on your circumstances, of course, it's very contextual, but at the same time, time is so much more valuable than the $100 that you spend to pass the account. In addition, if I'm trading on a $100,000 account and it takes me 3 to 4 months to pass the account, there might be someone at the same level of me with the same amount of money, etc., and that person's just failed 2 $100,000 accounts, but then passed the third one. He's then funded, and then he makes $2,000, which covers all his losses and also makes a profit. Whereas I'm still sat there trying to beat this funded account that I've been on for a long period of time, and I'm wasting my time. I'm genuinely losing money by trading on the same account. So my recommendation for you guys is to increase your risk. Do not be scared. Don't place trims, place a stop loss and a take profit and just let the trade do its thing. If you're a skilled trader and you're not an amateur and you're not new to this business, you should be able to hold a trade to its TP. You should not be emotional with the trades, and you should enable the trade to do its thing. Okay, just let it do its thing. And the accounts that you are doing currently right now, if you take this advice and you put it into practice, I guarantee you'll see a massive difference on the speed you pass or fail accounts. If you fail an account, that's completely fine. Restart, do it again, go back to the drawing board and do it again. But the important thing, if you do fail, you need to remember that you've probably just saved yourself 2 to 3 months. Okay, so go back to your job or whatever you're doing and get the money back to purchase another account and run it again. That's my advice personally, and that's the only way that I've been able to upscale my funding to the max. My third and last piece of advice for passing these funded accounts is you do not have to trade every single day. Okay, a lot of people come in Monday morning, they're immediately looking for a trade. They're trying to find a trade to get into this funded account. You know, they're trying to find that one trade that will pass the account for them. There is millions of trades throughout the day that you could potentially take, but you need to sit there and allow a trade to come to you. And let me explain. So this is a theory that I like to use when I'm trading. So what I'll do is I'll wake up in the morning, I'll go onto TradingView and I'll flick through all the ticker symbols that I trade. So I trade gold, usually USD, JPY, sometimes Euro USD, GBP USD. Depends what the setup is, but typically I'm mainly looking at gold. I'll look at DXY and I'll look at various other things, right? And then I'll sit there, and if anything is not giving me like that kind of burst of like energy or that burst of, oh, this looks really good, then I don't trade. I don't need to. I don't need to look for a trade or place a trade every single day. So I wait for myself to see a setup, and my brain then goes, yep, that looks really good, and then I'll place the trade. But if I don't see anything, then it's completely fine. If it's Monday, Tuesday, Wednesday and I haven't taken any trades, I do not care, because I'm keeping my capital, I'm preserving my capital. And capital preservation is so important in the industry that we're in. If you've got a $100,000 account and it's fresh and it's brand new, would you prefer to not trade for 3 days and the account be break even? Or you're trying to place kind of mediocre trades throughout Monday, Tuesday, Wednesday, and the account could be down 2-3%. You would then look at the account on the Wednesday and go, oh, I wish I could just reset because I took very bad trades. So now use that mindset of, you know, I'm not going to take bad trades, I'm going to take A-star setups, and I'm going to look for those good trades that will make the account pass. So then you go, okay, do I see anything on Monday? No. Do I see anything on Tuesday? No. Do I see anything on Wednesday? Maybe. Right? And then place your trade. And that trade could genuinely, if it's a 1 to 3 risk to reward, you risk $1,000 to $3,000. You've then made technically 1,000 over 3 days because you're being patient. A lot of the times people will fail the accounts just purely because they want to trade the account up, if that makes sense. So they want to pass the account. They're not passing the account, they want to pass the account. So they'll place ridiculous trades and they'll find an excuse for the trades, and they'll place them and then they'll take a loss, and then they'll moan at themselves that they're not a good trader. You are a good trader. You're just using the days wrong. So that's my last piece of advice. Do not trade every single day. It's not necessary. You don't need to, okay? It's not essential for trading. I know some traders that make 1 trade per week and they're much richer and successful than me, and it's because they only find that one setup and they make their bread and then they leave the market, okay? So that's kind of the mindset that you need to be in. So we've broken down the trades that I'm currently running on my phase $200,000 account. Hopefully in the next video, you'll see a certificate from me and the account's passed, and that would be brilliant. If not, it's fine, okay? If not, it's fine. Maybe I've taken some bad trades, but 9 times out of 10, I don't breach the account. I just typically am in drawdown and I slowly have to bring it back. But we'll see what happens with the account. It's exciting. So we've broke down the accounts, we broke down the trades that I've took, and we've also spoke about 3 habits to have when you're trading, either funded or challenge accounts. Don't waste your time. Okay, don't need to trade every single day, increase your risk, all those types of elements that you need to do, and to, you know, not be scared and actually get into this space and get funded and get money out of the markets because you genuinely deserve it. So put the work in. I appreciate you all for jumping in this video. I've been Cree Trades. You can see me on Instagram or any other social media pages. Thank you for jumping into this video. I really appreciate you guys for joining in. If you would like any other videos like this or any other thoughts that you have for different styles of videos, let me know in the comment section. And we are currently running a 50% giveaway for first-time traders with GFT. The code is FIRSTGFT. I'll put a link in the description for you guys to purchase this account. the first account that you purchase with GFT, you will receive 50% off your first account. If you've already had a GFT account, unfortunately, this sale does not work for you. But if you are brand new to GFT, please take advantage of this promotion. Right, I appreciate you all. I'll see you in the next video.